Hey, it's Vinny. We've got the red background up today because we're talking about BJ's today. Their logo is red, markets are red. Tesla and Netflix report later. They're red. Tesla's down 4%, $10 already before they even reported, which is pretty wild. Going to be covering Tesla and Netflix earnings report later on. So if you're interested in those, definitely subscribe to the channel. But first, I wanted to talk about BJ's, which I think is a stock with a lot of potential upside here. So if you're new to the channel here, on Investment Club, we talk about innovative companies as well as the companies that we personally use. So I've been shopping at BJ's for a long time, and I figured it was time to take a deep dive into the company. And I was impressed with what I found. I think it could be a solid portfolio addition at the right price. I think it is recession resilient because they've held up, they've grown for 25 years throughout all different sorts of market cycles. And I think there's also lots of room for growth. So if you're not familiar with the company, BJ's is a membership-only warehouse club similar to Costco or Walmart Sam's Club. And the stock has performed very well in recent years. So as you can see here, over the past 5 years, BJ's is up 211%, outperforming the likes of Costco and Walmart. And it's got a PE ratio currently sitting at 19, so up a little bit. The stock was in the green today in a sea of red, seemingly. But so BJ's PE ratio on 19, Walmart's around 31, and Costco is around 45. So, basically trading at less than half of Costco's valuation. As of the previous quarter, Q2, they have over 6.8 million members, continues to grow every year, up 5% along with their membership fee income. They have a 90% tenured renewal rate, so 90% of members choose to renew their membership, which is great, and Costco has a similar rate, around 90%. So definitely a strong value offer, clearly, not a lot of churn. And the company is expanding. They opened 3 new clubs and 4 new gas stations so far this year. They just entered their 19th state, entering the Nashville, Tennessee market. They currently have 238 clubs and 168 gas stations. And when you compare that to Costco and Walmart, Sam's Club, owned by Walmart, has 600 locations in the US. Costco has 591. So BJ's less than half the store count. Now, BJ's has a nice niche model here where, their locations are locations that wouldn't be practical for these bigger companies like Costco and Walmart. They'd be too small. So that's one of their advantages, I think, over those two companies. And they're bringing in just under $20 billion in revenue a year as of 2022. So the warehouse model has a lot of advantages against traditional retail, requires less labor inside the club. BJ says that they offer 25% better prices than typical grocery or supermarket stores. And they say you get a 10 times return on your annual membership fee. So again, high value proposition, and that's demonstrated as with this 90% renewal rate, right? Most people are sticking around. And because they have this membership model, it also gives them a ton of comprehensive data on members. Now, this US warehouse club market size is continuing to grow every year. It's growing at a faster rate than other more traditional segments of retail. The warehouse club segment is growing at an 11% clip. And as you can see, as of 2022, it only made up 4.9% of US retail sales. So it seems like there's a lot of room for it to continue growing. And I think this is a really good sign here. Their membership fee income has increased steadily over the last 25 years. Now, throughout that time, they've continued to expand the store count. They've basically tripled their store count since 1997 when they had 84 stores. And back then, the renewal rate of the membership was only 81%. And that has steadily ticked up every single year, even with 4 membership fee increases. So after each of these membership fee increases, the renewal rate continued to tick up by 1% 3 out of 4 times. So there was only this one time here in 2012, 2013, where the renewal rate after a fee increase went from 84% down to 83%, but every other time they increased the membership fee, it just continued to tick up gradually. So most recent one was in 2017, and the renewal rate went from 86 to 87%. And as of 2022, it's the highest it's ever been at 90%. So this is trending in the right direction. That's what you want to see. Now, they have a differentiated strategy. I think the most relevant comparisons are Costco and Sam's Club. So compared to them, you get a broader assortment, you get smaller pack sizes, you've got a smaller club format, convenient locations, and a full-service deli that those stores are lacking. So this may be, more appealing to maybe smaller size families that don't need quite the bulk that you can get at a Costco. And as I said, with grocery, they have 25% lower prices versus your traditional grocery stores. Now, they also have this treasure hunt experience, similarly to Costco and another company that I like that I've discussed on the channel, TJ Maxx. I think the treasure hunt experience is a great model. And it shows because it results in people shopping more often than they normally would. They're coming back more often than they normally would because there's this incentive, there's a dopamine hit of finding something that you didn't expect, so it keeps people coming back. I think it's a great business model. Now, as I said, they say that you get a 10x return on your membership fee when you factor in all the different types of savings. And BJ's also has a significant amount of their revenue comes from gas and fuel. So like I said, they have 168 gas locations corresponding with their stores. And, this is a caveat because it does mean that their revenue is subject to gas prices. So when gas prices are high, their revenue tends to be higher and vice versa. So that's definitely something to think about, keep an eye on, and just recognize that, as gas prices decline, BJ's revenue is probably going to take a hit, and it leads to some, lumpiness and cyclicality in this business. So here's what I think is really interesting. This BJ's is primarily in the Northeast of the United States. So BJ's is heavily skewed to the Northeast. They're really just breaking into the Southern markets here, as you can see on the map. So they've got 238 clubs, and they're expecting to open around 10 new clubs per year for the foreseeable future. They just ended their 19th state with that Nashville, Tennessee foray. But, a lot of room for growth here. As I said earlier, Costco, Walmart, Sam's Club under Walmart have more than double the amount of clubs. So BJ's has a lot of room to grow, probably throughout the South, and definitely as they start to move westward. Lots of untapped market in the U.S. Obviously, they'll be competing with Sam's Club and Walmart, but I think because of their differentiated approach, they will be able to find locations that don't work for Walmart, for Sam's Club, and for Costco, locations that may not be worth it for them, but are worth it for BJ's. So this company is well capitalized, well managed. They've been paying down a ton of debt. They're buying back shares, and they've got a great return on investment, return on invested capital we'll look at in a second here. But as you can see, they've reduced their debt by $2 billion since 2017. They're returning cash to shareholders with lots of share repurchases. They've repurchased $60 million so far in 2023, $60 million worth of shares, and they've got $259 million available for further share repurchases. So I like this business. When it comes to groceries, I find my money goes a lot further when I shop at BJ's versus regular grocery stores. That's one of their highlighted strengths. And the quality and quantity you get is just hard to beat. So like I said, caveat with the gas, that is a significant chunk of their income, their revenue. So it's going to fluctuate with gas prices. But clearly, it's a sticky business, 90% renewal rate. That's what you want to see. And the fact that it's been increasing every year for the last 20 years. So I like the business. I think that if we entered a recession, obviously every company is going to get hit. The stock price may go down, but they will weather the storm, and they may even benefit in certain segments like the grocery value offer as more people potentially shift from dining out to eating in. Their business has shown tremendous resiliency. They've been through lots of different market cycles since 1984, and they've continued to grow and grow. Now, BJ's has these twin engines of growth here, which is the revenue is growing and they have a high return on invested capital. So the 5-year average revenue growth rate, just under 10%, ROIC 14.5%, putting them right in the middle of Walmart and Costco. So obviously Costco, you're always going to pay a premium for the quality, but BJ's is doing pretty well. The fact that these are both basically double digits is a great sign. The business is efficient, it's growing, it's effective. So this stock I'm putting on my watch list for now. I look forward to hearing what you guys think of BJ's and this whole warehouse member retail space in the comments below. If you enjoyed the video, don't forget to like and subscribe. And I'll be covering Tesla and Netflix next. They're both reporting earnings in a couple hours. So if you're interested, definitely subscribe. I'll see you guys on the next one.